Okay, so I'm doing another remade video for daily bias and how to understand the daily bias, and we'll mainly just go on a lot of examples. So when it comes to being the daily bias pretty much helps you understand where price wants to go to next, right? So if we anticipate where price will go to next, then we can find trades along with that direction, which makes a very much higher probability. Okay, so when we also look at daily expansions and you've seen premium discount, you do know that I've mentioned that you want to long, for example, when you are in discount and you want to short in premium. Now, in some cases, when there's true expansion, you will realize that the next daily candle doesn't actually go back below 50% of the previous price leg, and it only stays above 50%. So it stays in premium of the range, and it still gives you long to that objective. So when you watch the strength switching concept, right, my cracking CIC video, you will see when you can long in premium and when you can short in discount, right? There's a specific framework that you need to look out for, which makes trades high probability when you are not getting price go into premium or discount, for example. Now, the next thing I want to talk about is that there's always a price delivery, right? So in any everything's fractal as we mentioned before, but even on the daily time frame, we have four phases of price. You have expansion, which is when price just moves in one fluid direction. You have retracement, so we make an expansion move, right? We go up like these candles here on the right hand side. We make a move upwards, and then we slowly trade back into the range. And then you have consolidation, right? Daily candles are staying in between a higher time frame range. And then you have your reversal. So we hit an objective and pretty much V-shape hard reversal back into the range, not slow move like a retracement. Okay, so now that is set, let's go into trading view. Now here I'm on the trading view charts. And the main thing I want to show you guys initially is if we go onto the daily time frame and set aside um, looking at daily bias, right? So if I were to go to, let's go to gold, go to random chart, and let's randomly go back in time. Okay, let's choose a random date. Look, there's an option here, random bar. It shows me a random bar, so I don't know where we are. We are now in 2019, right? 2019, Wednesday, 23rd of January. Okay. Now, I don't know what will happen next. We will analyze the daily candle, and this is not going to look at looking for trades, right? If you know my higher time frame bias or like my time frame alignment, let's say here you can see we are on a weekly or a daily fair value gap, and we can see prices rejecting from it. Now, look, imagine this is me in 2019 drawing the charts. We have equal lows at the lows down here, right? Equal lows, right? That's a drawn liquidity. You can see price has been in consolidation and expanded away from it, leaving a bearish gap. Now you can see here, we now have a candle 1 into the gap, and now we have a candle 2 bearish closure. Now let's say I was looking for a trade. Let's just say for this one example, I would go to the 1 hour time frame, see confirmation. This is all just Wednesday still. Probably wait for Wednesday to finish up. Now, if I were to look for a trade, it's simple, right? We've swept the highs and made a change in state delivery, and we're in this 1 hour gap. So I would look for a trade here, right? So we are trading from a daily, which is us going to the 1 hour, and then from a 1 hour gap, we go to the 5 minute and then look for trades, right? But it's not available at this time, okay? But let's say, okay? And then that would be your trade to go to lower, right? Let's see if it does it or not. Well, it does, because now if we go into the daily time frame, right, this is what happens, right? Candle 1 on Tuesday, candle 2, your reverse to candle being on Wednesday. So you expect Thursday now to expand lower to these lows, right? And if I were to look for a trade setup, right, Thursday opens higher and changes the delivery, I would just have a short already from this gap, let's say, and you have a stop loss, I don't know, and then you go for short. That's already a 5 RR, right? And look, okay, well, we got edged here. Okay, we would have gone break even, but you can see the point is Maybe there was an SMT at that low. That's besides the point. Besides the point is how you can go from top down to bottom using the daily bias analysis, right? The daily candle structure. The same goes for 4 hour, 1 hour, 30 minutes. All of them are times fractal. So you can see here on the daily time frame, we are trading internal, IRL, to external being ERL, which is these equal lows down here. Now we edged it, but you can see candle 1, candle 2, candle 3 formation. Right? Now this candle closes bullish. I don't think it's important. Let's say there were SMTs, right? If there was an SMT at this low with here, big if, then you would change your bias for longs because we changed the state delivery up here and we have a gap. So when Friday comes around, you want to go for longs because if you realize on the top, we also have consolidation. So we are technically in a consolidation range, right? You see these highs and low. This asset did not take out the higher low for quite a lot of days since January opened, okay? And we are 3 weeks in, right? The weekly time frame, you can see we are trading from a weekly for value gap. Now, if there's an SMT with this weekly for value gap, we go weekly via the 4 hour, and the 4 hour did change the state delivery. So if I have all these in mind, then I can expect daily bias to go higher. So Friday could go higher to these highs if there was an SMT formulated. Now let's see how Friday opens up. Look at that. I am not doing this. I literally don't know when these candles are going to show up. And I literally told you what's going to happen. It's because it's a mechanical system with probabilities that work. Okay? These are things that are in your favor. Now look at this. I'm sure there's an SMT at these lows. I'm sure we created that. You see that 4 hour CISD. So when price opened up here, price just continued longer and taking out those highs, right? That is how you do walkthrough analysis. That is how I come in every day and do my analysis. Okay, that is super important. I pretty much just gave you the sauce right there. That is clear. Okay, now once you have this huge candle, a new week opens up. Now remember, we just took out the drawn liquidity on the right hand side. Now, once this happens, and we can expect new phase of price, we either take out the high on next week and then retrace or reversal into this range, or we continue expanding. Now, this is the case where you're going to need confirmations. Now, for me, where would I even long in this case, right? I'm expecting the next day to go higher no matter what, but I'm not expecting much of an entry model unless it deeper traces on Monday. So let's see what happens on Monday. You can see what happens here. Monday does deep retrace, so you could have taken longs when we retraced in here. Now here's, for example, where we don't have the 4 hour gap, there might be a SMT, but if there isn't an SMT, you realize we are in premium. We are in premium of the range. So we can't just blindly long so high in premium, especially after a drawn liquidity was met. We will need to get our confirmations, which you can watch via the strength switch video, but to mention it, I'm sure this is the video after it, I think, you will need a 30-minute/1 hour confirmation, right? So we did get a confirmation here, but we don't tap into the gap to go for longs, right? The 90-minute also is nice. So you get a confirmation, but no retracement to the gap to go longs. Besides the point, you can see now this Monday candle did take out the previous candle's high, as I mentioned. And this closed bullish, so I would still expect the next candle to be bullish in terms of at least taking out this high, and then it might reverse into this new daily fair value gap, right? Let's see what the next candle does. It just fully expands, no retracements. Again, this candle is a bullish candle, closed above the previous candle, so you expect Wednesday to still continue it and at least take out that high. Wednesday does the same. You can see how I'm just formulating daily bias, right? You can see in true expansion, price is not going below 50% of the range, as I mentioned. It is staying above 50% and keeps trading higher. That is why in true expansion, that's what happens, and you want to look for your confirmations that you can take longs in premium in these true expansion scenarios. Okay, so now you can see we've gotten 3-4 days of expansion, so you would expect the move to kind of slowly come to an end, especially since Monday opened as the weekly open. right? So if you watch the video where you can see the daily profiles, weekly profiles, you know that the move will probably come to an end soon. So I would still expect, since we close above the previous candle's high, that Thursday takes out the high and maybe sets a reversal candle. There you go, right? You can see Thursday sets a reversal candle, C1. C2, you expect Friday, which is the next day, to trade back into the range, right? Why trade back into the range? Because we've set a reversal candle. Now you can really, if you realize it's a reversal candle just with the wicks, not with the body. So this just, you have to be a precaution. Now, how can you confirm that this high is in for the week? You go to the 1 hour time frame, see if you got a 1 hour change of state delivery, which you did with some gaps. So you can expect price to still go lower on Friday. And if you watch the TGIF, which is again the weekly profile, you are expecting a retracement on the last day of the week. Where is it? Back at least to 0.20. So since we're around 0.2, you want to target that daily fair value gap at 0.3, 30% of the weekly range. So your draw on liquidity is this daily fair value gap on Friday. Now let's see what Friday does. There you go. It is simple, mechanical, every day. If you come up with a plan, and especially if you're a beginner, write down these plans so you know what to expect on the markets. Because when your mind is clear and you know what to expect, I promise you, trading becomes so much easier rather than just hopping onto the charts randomly and saying, oh, can I find this? Can I find that? Unless you're super experienced, and even if you are super experienced, it is always better to plan ahead. Okay? So that's the plan. You can see we tapped that 1 hour for value gap and traded lower. That's just trading, right? Now again, now the new week will open up, and since we closed bearish, you would maybe expect, and since the 1 hour did not give confirmation that we made a low for Friday, you would expect Monday to take out this low and tap into these gaps. Monday does exactly that. Now we tapped again in this daily gap. Can we trade higher from these daily fair value gaps? Like, can we go from internal to external yet again? Can we do that? Let's see. The 1 hour, because we're trading from daily, give you your 1 hour confirmation. It did change the state delivery, but it's not the, it did, right? There's no gaps, but it's retesting the order block. So potentially you can reverse, but it's also open up to us taking out Monday's low because it was a bearish candle. Okay, now this is the case where you get consolidation, right? You have expansion via retracement, and when you are in retracement, you're consolidation. Why is it consolidation? Because we are staying between a candle's range. So I'm gonna forget anything, right? If you look Tuesday, right, you could have longed, but you can see consolidation, slow day. So in my terms, I would rather wait for the highs to get swept to then look for a trade. This is the case where in consolidation, you don't touch anything until we take out a higher low, or unless there are gaps to trade away from that consolidation range. So let's see what happens now. Okay, we just trade lower, and now we are in this gap taking out the swing low, right? So now here is where I want to see if we can trade higher. Now again, the 1 hour does not confirm anything there. So I will continue to look on for, right, until we sweep that low. Okay. So let's have a look. We sweep out that low, tap into a gap, and we close this as a reversal candle and a bullish candle, right? So C1, C2, and if you look on the 1 hour time frame, we do have a bullish expansion away from the lows, right? We changed the state delivery, we made gaps, right? Here's your change of state delivery level, right here, right? So we've closed back above and we created gaps. Even though we are in this bearish gaps, we are bullish now, right? So I would expect now the next day at least to take out Thursday high, Friday to take out Thursday high, and if we are correct on the buys, it will trade to these highs now. There you go. We have a nice Friday candle 1, candle 2, candle 3 formation. And this is when you expect now Monday to continuate. We're almost about to daily CISD as well, which makes it a very much more high probability that we will take out these highs. Okay, now Monday closed bearish, it didn't take it out, and now we are kind of in consolidation range between these two candles. And we can see Monday, Monday also did change state delivery, right? So it's very possible that this wick is in. Now let's say if price was to respect the wick, you want to see 50% of the wick on the next day that it trades to be respected if we don't take out the low. Okay, let's see what happens. There you go. We respect the wick because we don't close below 50%. We trade above it. And you can see it was a slow Tuesday. So when it's slow Tuesday like that, you can just look in the lower time frame, see does it confirm your higher time frame that we can go higher. The 4 hour, it's reversing, right? Candle 1, candle 2, and candle 3, right? So I expect now we continue expanding on Wednesday. Okay, we expanded. When it closes like this, it did expand because we took out the highs and now we made a reversal candle. So the same thing here. We made a reversal candle, so now we can expect the lows to get taken out. Why? Because we now have 3 stacked lows at the lows. 3 stacked lows, right? You have just 3 equal lows being formulated. So now you can see we created a Wednesday high of the week, and now Thursday and Friday should expand lower and take out this gap as well and retest this previous high. Okay, you can see we did take out all those 3 lows, and as soon as it did that, price traded higher. Again, the same thing, right? It's just, I told, like, you hit these things and then price can reverse on that same day, right? So you're expanding, but it reverses on the same day. Reversal and expansion can happen together at the same time. And now you can see we have a V-shaped reversal. Now I am bullish again to these highs, right? It's just, that's how you're going to be trading, right? So this is a reversal candle. Friday continuates higher. Now Monday should again continuate higher, and it should stay above 50% of this previous candle's range. There you go, and we take out the high. I'm going to be done there, but you can see how valuable this video is. How valuable. And definitely, I think I'm going to put this video specifically on the Mindvest channel as well, just so people can see how crucial daily bias can be to improving your trading and improving your win rate. Of course, daily bias is one piece to the puzzle. You need to have a strategy. Luckily, you guys in Mindvest have many videos that you can learn from my entry model, everything that you need to learn from. And yeah, super cool. I will keep the previous daily bias video, but this is the more updated one, and this one will be on YouTube. Peace.